What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. We did just finish up the trading month of June, so we're going to be going through some monthly charts here on the broad market, and then as always pointing out some key levels to be watching for on the daily charts after that. If you're new to the channel, all of our free resources are linked down below in the description of this video. So we have a free swing trade newsletter, free Discord server where you can chat with myself and other traders in real time, as well as an Instagram account where we give away some free swing scans and just technical information throughout the week. So check all that stuff out, leave the video a thumbs up if you appreciate it, and let's hop into this analysis. So jumping right into our SPY monthly chart, again, we're talking about this second candle here. We did trade for about 2 or 3 days here in July, so ignore that last one. But what we're looking at is the structure of that candle, where we have a large upper wick, a small body that's formed, and then a little bit of a lower tail as well, and we call that an inverted hammer, right? It's something that looks very similar to the structure of that candle right there. And technically, based on this chart, it is a lower high. So we're watching that as a lower high. But what's interesting about this monthly bar is that we've been talking about this consolidation range for quite some time now, about a month, right? So for that to be, an upper wick, is that the end all here signal? Is this inverted hammer going to lead to some massive pullback in the market to go back and fill all these gaps below? I'm not really so certain of that, just because of, like we said, this consolidation range that we've talked about. We do want to see it take a little bit of time to resolve this area of the chart. We just made a pretty impressive run, recovering all the way from the lows down here in March. And then from there, obviously, now, the market needs to cool off a little bit. It's not something that can just, bounce right back up and continue soaring forever and ever. So I'm not entirely convinced that this inverted hammer is going to lead to more selling based on the monthly chart and what we've talked about over the past couple of weeks. But I do want to make you aware that we do have a lower high on the monthly. So that's something to be watching for. If we can break out in the month of July and start to, negate that as a lower high, then things would be looking good for continuing the uptrend. But for now, do keep in mind that this level is the key one in terms of the monthly analysis. And jumping into our weekly chart now, we can account for more of the couple of days in July that we've been talking about, and things are looking really good, as we've talked about again and again and again. This is the consolidation range that we're looking at in order to form this weekly bull flag that looks something like that. Again, a breakout over this high I think sets us up to retest at least the all-time high, if not go slightly higher. And things are looking really good. We've essentially just gone sideways, and the more consolidation and anticipation we can form above 300, getting that price acceptance above this level, then I think the stronger the chances are for that breakout to retest the 339.08 all-time high and could possibly continue higher. So everything on the weekly, again, still remains intact here. The bull flag is, holding up. We didn't really violate 300. We opened or tested a little bit below it early on in the week, but since then obviously snapped right back up to our key resistance, about 50%, maybe even a little bit higher than that of the range here. So let's break it down to the daily and continue talking about the key levels. If we look at where we're trading, again, our sort of trend line, if you remember, we talked about this one potentially holding up in last week's video, and of course it did resolve to the upside. So we'll keep that one in there for now, just in order to remember where we're at in terms of pulling back into it. And we'll make this a little larger so we can talk about it easily. And again, if this red candle continues to pull back, first area of support that we're looking at is coinciding with this trend line and this horizontal price level as a super support there, and that's at 308. We've talked about that level quite a bit. Once we recaptured it, we moved right back up to our 312 resistance. You can see there on Wednesday it was, because of course we had a shortened trading week. We backed off of it a little bit, and then once we gapped up on Thursday there, we filled the gap. So good repairing of structure below, but of course running right into resistance at the bottom of our next gap that we're paying attention to, which ultimately closes up at 318.22. So I think with all of these touches up here, this strong and pretty clear resistance level in the chart right around here between 314.30 and 315.55, which is the bottom of the gap, I think with all these touches, we're starting to form what I would like to call a pressure cooker breakout level. If we can break out above it, again, I think the gap fill happens quite quickly with all this pressure and buying built up below. If that gives and our next resistance is in play, we're looking at a move to retest the top of our consolidation zone all the way up at 323.44. Anything higher than that, and of course we have another gap in the chart, remembering that this is a fake print here on Thinkorswim, and the gap is between 325.16 to 332.12. So that's covering pretty much our targets to the upside. I don't necessarily think, again, that we break out all the way up to fill this upper gap here in the coming weeks. I do think that, again, we want to spend some time and really resolve this $300 level to the upside. The consolidation range, spending some time in this box would be healthy for price. But based on the setup that we're looking at here on the daily, again, a break of this level I think could look really good for a move higher. If we do get rejected here, we already covered that 308 sort of super support if we get that pullback, but anything lower, of course, we're going to run into our 200 SMA just before our $300 psychological level. Our 50 SMA is starting to catch up with it as well, so just a ton of support back here again at the $300 number, psychological support. And another thing I want to point out lastly is that we are continuing to form higher lows, which is really important in maintaining this uptrend. Of course, we have a low down here. From there, we formed a higher low here, and we did hang on to this next set of higher lows here. So it would be ideal to, again, maybe a little pullback into here, set another set of higher lows, and then possibly continue to fill the gap and then come up to our next target. So that's what we're looking at to the upside and to the downside as we mapped out. Lots of key support back here around 300. Anything lower than that, though, just so you are aware, again, small gap to be filled in between here at 296.89 down to 295.64, as you can see from these numbers over here. And then previous double top resistance should act as support as well, right around 294.37. Jumping into the Q's monthly chart now, you can see it's a lot different than what we talked about on SPY in terms of candle structure and position on our chart. So instead of the inverted hammer, right, that looks something like this that we saw on SPY, on the Q's we actually have a completely green full-bodied candle, remembering again that we're looking at that second one there. This is just a couple days of July, with a very, very small upper wick and an even smaller lower shadow as well. So closing at the highs of the month, an incredibly bullish signal. Also remembering that instead of setting a lower high, whereas SPY was somewhere in here, if you will, we've actually now set a higher high. So the uptrend remains well intact, new higher high. Higher lows are continuing to form. Again, we have plenty of room to pull back if there were to be some sort of crazy pullback to, again, set a higher low here on the monthly chart. Things are still looking well and good, and I don't think there's any reason to panic. With such a green bar like that, sure, the market could start to be getting ahead of itself by a little bit, but normally when you see full-bodied green candles like that, it's a sign that the bull's strength is really still there and you want to see a little bit more upside continuation. And now coming down into the weekly chart, again, not much to talk about here other than the fact that we have a completely green bullish engulfing candle where the range of this prior week completely engulfed the prior week's range. So again, a very bullish sign that we're likely to see some bullish continuation here. And then finally breaking it to the daily, where things become a little bit more interesting, just because if you look at the pattern that's been repeating over and over again, when we set an inverted hammer up at new all-time highs, blue sky territories, what tends to happen afterwards? A nice little pullback. Again, inverted hammer candle at all-time highs, a nice little pullback, and again, we've now set a new inverted hammer candle up here at the all-time highs. Is the market due for a nice little pullback early on upcoming next week? That'll be something that you should be paying attention to. Let's map out some key levels to be watching for. The first level is based off of our previous all-time high, and of course where we ran into a little bit of resistance there on Wednesday. That's at 251.15. If the market wants to continue lower than that and pull back a little bit more, we of course have a super support forming down here based on our previous all-time high, this one of course, then a couple touches in here as resistance that should act as support, as well as our support trend line of the bullish channel at 246.56. Again, remembering that it could take a few days to resolve. It took 2 days here, 3 days or so to resolve here, 3 days to resolve here. So if we do get into it, do expect it to take maybe a day or two before we see that bounce off of it, but that would be a very, very good entry point for a long based on limited risk to the downside, knowing that it's such a strong support there. But if it does break and we do continue lower, then we're looking at our next support point to come in here based on all the touches that we had at 242.52, and then lower than that at 237.47. To the upside, of course, if we do break out over our new all-time high at 254.27, we're looking at blue sky territory levels, which are whole and half dollars, as well as any intraday levels that do form. And lastly, checking in on our good friend IWM, Russell 2000, and the small caps. Remembering, of course, looking at that second candle in there, it looks more like SPY, obviously not a whole lot like the Qs, but it's still different in the sense that instead of an inverted hammer candle, right, I think what we're looking at is more of an indecision doji. So the lower wick is actually more similar in size to the upper wick than what we're looking at in SPY. They're relatively similar, and again, a small little body in the middle there. So more of an indecision candle as opposed to an inverted hammer that would, tend to tell us that we're going to start to see some more pullback. So that's noteworthy in terms of candle structure. The next thing I want to point out is that unlike the Qs and SPY, we've already set a lower high, right? So we have a high here. We set a lower high here right around January and December. And will this ultimately be the third lower high that we set here as opposed to the rest of the market, which is trying to chug up and keep setting new higher highs? So that's the key difference that I want you to take away from this IWM monthly chart. If you'd like to keep a longer term sort of trend line in mind here, you could kind of do something like that. Obviously, we've got some room to run up to it that, in order to come back into to retest the trend line. I don't necessarily think that's going to be what's in store. But if you're a longer term player and you want to watch things like that, it could ultimately end up being on your chart. And looking at the weekly time frame now, again, I think that we are starting to see something that looks more like SPY, where we're trying to form a weekly bull flag, remembering that it could look something like that. We're starting to see that consolidation. It's starting to get really tight. The key resistance takeaway from the weekly chart anyways is here at 145.07, just about. You could call it 145 the whole dollar, and it's sort of at the lower end of our trend channel, which we're going to adjust here in just a moment. But based on the weekly, you can see how many times price has tried to get up through that level with clear rejection above it when this sort of thing happened up here. That's going to be the key going forward. 145.07, if we can get back above over it, I would say a retest of the upper end of our consolidation range could be in store at 152.38. And on the daily time frame, I did say we're going to adjust that support trend line because I think it could look something that fits the trend a little bit more accurately, which would be something like that, where we're starting to get, again, remembering anchor point down here, touch 1, touch 2, sort of in that area, and then of course this is accounting more for this bounce in here as well. So I think that's a bit more of a better trend fit. We are still above trend here in IWM, which is a bullish sign. Remembering that we talked about this 145 key level as resistance to the upside with the 200 SMA just above. Keep that in mind if we get a pop up and over that 145. And of course, our 152.38 level is our next resistance above that. After that, if we again get a miraculous push to the upside across the entire market over the course of July, then of course we could see our 160 level. To the downside though, if we get rejection off of our 145.07, of course remembering that we could come back in and retest our support trend line. Super support happening here at 139.77, 140 if you want to round it to a nice whole number. Just below that, we have our next 50 SMA and support level, which will start to act as a super support as well, around 136.31. It was a triple bottom that we talked about, flat lows that we talked about in last week's video. Anything lower than that, we have 134.45, and then the top of our last remaining gap in the chart here at 130, just below that. So keep all these levels in mind. But again, based on where we're at in terms of the monthly bar, in terms of the weekly and the whole consolidation thing, I think that, all these touches in here are, again, just like SPY, starting to form a pressure cooker top where any sort of retest of that 145 looks really good for breakout higher. So if you've made it to this point in the video, I'm sure you're enjoying the analysis. Be sure to hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. So we're going to move through our companies slightly faster, but here on Apple, the main takeaways are that we formed a little bit of a double bottom there on Wednesday, Thursday, right at just below a key support based on previous resistance there at 365.25. If we can maintain that and get any sort of bounce, we're looking for a retest of our first all-time high sort of zone of resistance between 370 and 372 over that, and we're looking at blue sky territory levels, whole and half dollars, as well as any intraday levels that do form. I think the chances for this scenario to play out are quite likely based on the fact that we're coming into earnings. I think they're, again, tech and essentially the Qs and the whole market is sort of hot right now. So I think the push up wants to continue, but if it doesn't and we break down below our little double bottom that we formed on Wednesday, Thursday, our next key support below as a previous breakout level was at 353.41, and lower than that, our double bottom from in here at 345. We'll just round that off to a nice whole number. Netflix looks pretty good as well, remembering that we have earnings coming up here. We had a really impressive breakout there on Wednesday, and it's no surprise to see the market sort of digest that move and see a little bit of a pullback here on Thursday as well. But we're pulling back right into a key level. It was our previous all-time high. It's also the back test of our resistance trend line that we've been watching for a little while now. So I wouldn't be surprised to see a bounce off of that just as a strong support area in the chart. But if we don't and we see a continuation lower, we're looking at a move to this level, which is just below at 469.15, where we have slightly more touches than just our sort of double top up here. Anything lower than that, we're looking at our previous all-time high from here to act as support. That's at 455.60, and below that we have 445.16. But based again on the fact that the market's hot, tech is hot right now, I think the FANG man stocks are just going to do generally well before earnings. If we get a retest of 492.28 and go higher, we're going to be in blue sky territory levels, whole and half dollars, as well as any intraday levels that do form. So Tesla has just been an absolute monster, going and gapping up massively there on Thursday. So no surprises. If we break down below our gap, there's really nothing, no price exploration at all anywhere in this gap. So I would imagine that it fills quickly if we break into it. So anything under 1185.27 and the potential to go to 1134.78 is there. Again, I would watch out for the partial gap fill. Maybe it takes 2 or 3 days to sort of happen there, but I would expect it to fill based on the fact that, of course, there is zero price action in this area of the chart to go on in historically anyways. Over the top of our new all-time high, 1228, of course, we're looking at blue sky levels, but here on Tesla, instead of the 50-cent marks, we're looking at dollar marks, $5 marks, $10 marks, $25 marks, things like that, just because we are trading now well above $1,000. If we do break down below, of course, the gap fill here, then I do want to point out on the 30-minute chart, at least, that there is some price history in here, which, the daily doesn't do a great job showing. There is a level of support, sort of a support zone, I would just call it, in this general area of the chart. You could even call this an area of support as well. So looking at 1110, and then anything lower, we have 1085 and 1071 as well before we get back into a really key market area, which is around 1019.55. I'll flip it back to the daily just so you can see what I'm talking about. But of course, that was really where the large breakout started from. So that is a key area of support as well. If there's any sort of major collapse, which I'm not saying there will be, but I do want you to be prepared for any sort of levels below if that is what happens. And looking at Alibaba, of course, we resolved our uptrend support line here over the course of 3 or 4 days and then we broke out over our 3-day balance there towards the end of the week, leaving a nice gap behind in the chart here. So anything below this 220.17, the gap fills down here to 216.44, and of course we will start to be coinciding with our support trend line. So look for a super support bounce off of that level, and I wouldn't be surprised if that bounce again is a retest of the 220.17 area. But if we break down lower than that, we have our area in here, which is at 213.70. 50 SMA is going to start to coincide with that, as you can see here, so that'll start to creep up as well. That sort of covers us to the downside. To the upside, though, if we see a continuation, we've talked about this so much in BABA, but this was sort of a chop zone, and then we saw a doubling when we broke out higher. So we're looking at a move over 225.31 to 231.05. Anything higher than that, let's just check real quick. We don't really have anything mapped out higher, so we can scrunch it up a little bit. That's because we'll be in blue sky territories just about. So blue sky territory levels above. But again, based on what we're looking at here, gap below, it's sort of been really, really choppy through this area. I wouldn't really be watching for any sort of major move out of that area. Facebook, this is an absolute classic. We called it there on last week's video where everyone's panicking. Absolutely overextended day there on last Friday. And then what did we do this whole week? We bounced quite nicely, as we talked about. I wasn't really expecting a bounce to retake all of these levels, but I was expecting some sort of a bounce. So again, this is one more reason why you shouldn't be paying attention to the news and more paying attention to the charts here, because you would have known it would have not been a great idea to chase Facebook short in here. You would have gotten absolutely smoked. So the levels we're paying attention to now, of course, we're sitting just above a key support at 232.20. If we break down below it, I'm talking about red first because we saw a red day there on Thursday. Breaking down below would be a retest of our 224.20 level. 50 SMA is going to start to coincide with that. So whether or not it happens over the course of 2 or 3 days, 50 SMA could be there by then, looking for a super support first touch bounce. Anything lower, our previous resistance should act as support. It was sort of where we bottomed out there on the nasty selling day, down over 8%. That's at 215. To the upside, though, if this resolves here into what would be a daily bull flag, something like that, we consolidate in here just below our 240.66 resistance. A break over would put us at 245.19 all-time high. And then, of course, blue sky territory levels above that, remembering that earnings are just around the corner. NVIDIA is sitting up here, setting a new all-time high on Thursday, of course, at 389.50. So anything over that as we trade into the week is going to be blue sky levels, of course, whole and half dollars, intraday levels that form. Any sort of move to the downside, we're looking at a retest of this sort of breakout area here. That's at 380.17, and anything lower than that, of course, we're looking at supports below 360, 350, 355, 355.67, and then this is the one that you really want to be paying attention to here at 347.50. That's the one with so many touches. I think any sort of retest of that would ultimately resolve in a massive flush to the downside for a move all the way down to 322.42. I'm not saying, again, that that's going to be what happens this week, but I do want you to be aware of all of the pressure that's built up above this level at 347.50 specifically, based on all of the touches that we have in this area of the chart. So that's going to be the key one should any sort of, falling apart start to happen here. But again, I think more realistically, the inverted hammer here happening on the Qs as well, looking for a little bit of a pullback, and then potentially, maybe we set a new higher low somewhere in here and then make a move to retest all-time highs once again. Very similar story here on Microsoft, forming an inverted hammer candle there on Thursday's price action at all-time highs. So we marked that in at 208. The whole dollar, just about. Anything higher, blue sky levels, of course, to the downside, we have our previous all-time high to retest as support at 204. Lower than that, there's really a little ways to go before we come into our next support, which is at 196.50, so keeping that one in mind, and anything lower is at 193.89. Again, just like NVIDIA, I think there's the potential for a higher low to be set. Somewhere mid-range in here is really there. If we draw on a support trend line, actually, it could give us an idea of what we could be looking at. Going from somewhere in here, that's actually not even close to being in play. Well, nonetheless, I do think that the potential for a higher low to form somewhere in here is likely based on the fact that we're continuing to see it over and over and over again. Higher lows, higher lows, higher lows, again forming a higher low in here to eventually bounce and retest some of those highs, I think is a likely scenario, especially with the inverted hammer candle there on Thursday. And Amazon, just as beastly as Tesla, essentially making a massive move throughout the course of the week, all forming with a nice little hammer candle off of a key support. If you caught that move to the upside, congratulations. Very good technical analysis reading if you saw that hammer and acted on it. But inverted hammer now, of course, looking just like NVIDIA, Microsoft, the rest of them with inverted hammers. The potential for a pullback is there to potentially retest the breakout level here at 27.81. Anything lower than that, and we have this area of the chart acted as strong support where the move originated from at 26.30.61, and lower than that, we have the 50 SMA, in here as well, a key support area, 25.15.50. But again, do I think all these levels down, all the way down here, are going to be in play? Not necessarily, especially with earnings coming up. I do want you to be aware of them, but likely, I think, again, we set a new higher low, whether it be somewhere in here or at the breakout level, and then potentially retest the all-time high up here at 29.55.56. And then, of course, blue sky levels on Amazon, something over $3,000. I think actually $3,000 would make a really nice psychological target, but anything over that, we're looking at, of course, dollar marks, 5, 10, 15s, $20, $50 marks, $100 marks here on Amazon, because that's certainly realistic with the way it's been trading over the past couple weeks. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, then feel free to give it a thumbs up or just let me know down below in the comments section. It is Independence Day here in the United States of America, so happy Independence Day if you're trading from the USA. If not, still enjoy your weekend. We had a nice long weekend here. Enjoy it and stay green this upcoming week.